Wonderful. Well, thank you all for being here. We had a very good segue into this global discussion from the renminbi internationalization fireside chat or poolside chat, as you may say. But now we're going to take it global, and we're going to do a whirlwind tour. I don't know how we'll accomplish this, but 40 minutes for 3 continents, Africa, Asia, and South America. So let's get right into it. We'll start with you, Modupe, if you don't mind. At our Africa Summit earlier this year in Cape Town, you emphasized that international capital markets have moved from concept to execution. Tell us a little bit more about what you mean by this, and in particular, what are some of the initiatives and accomplishments in the African capital markets that have been overlooked, perhaps, by the rest of the world?
Great. Thank you, Mushtaq, and thank you for having me here at ICMA. Africa is a continent that is very dear to me and, that I've worked on for years. And one of the things that I've picked up over the years is some investors tend to see Africa through a narrow lens. A lot of investors are familiar with, South Africa, with Morocco, with Egypt as the core markets, but there's a lot more to the market than just those 3 markets. There's also sometimes the perception that there isn't as much domestic institutional participation as there is. Even though historically these facts have been correct, it's changing significantly. One of the things we found through AFC research, for instance, is that there's about $4 trillion of domestic capital available across the continent. About $500 billion of that sits with the pension funds. However, what we found is the pension funds don't have the right type of instrument to invest these monies in. And we're seeing a big shift in that. One of the proof points is a company called InfraCredit in Nigeria. And what InfraCredit was set up to do is to basically provide guarantees to issuers to ensure and enable credit access, to enable institutional investors buy into products that they previously wouldn't have been able to because of regulatory restrictions, etc. And the numbers speak to the effectiveness of this. Whereas in 2017, you'll have had just about 1.2 billion naira invested in these instruments. As at last year, you had about $263 billion. That's significant growth, 263 billion naira. So that's significant growth, right, in creating access for issuers. A similar company is also being set up in East Africa called Damana, also one of the investee companies of AFC, doing something similar, providing local currency guarantees, right, to enable access to market. So we're seeing, a significant move. The second thing that has changed on the continent is just the diversification of funding for issuers, whether it be sovereigns, corporate, etc. Mr. Fang alluded to the panda bond market. That's actually one of the examples I had cited here. We've seen in the last couple of years, Angola, Cote d'Ivoire, access, for instance, the samurai bond market. We've seen Egypt access the panda bond market. And all of this speaks to the credibility of these issuers, right? Because investors would invest only in names that they deem credible. So that's another thing. The other thing we're seeing is structuring sophistication as well. We're seeing growth in risk management and structuring capability. And this one I'm particularly excited about. About 2 weeks ago, a regional bank, EcoBank Transnational, issued a $450 million Nature Tier 2 bond. And this transaction, I'm proud to say, is the first of its kind, using ICMA's Nature Bond secondary designation. And that's the first of its kind, not just for Africa, but for the world. So, we're not just following, we're also leading the way. And I think that's significant as to how the market has continued to grow. So, when I say capital markets are moving from concept to execution, I mean examples of domestic capital mobilization, example of improved financial engineering, and repeat access to international niche markets like the panda, the samurai, etc. So the question is no longer, is there a capital market locally? It's how quickly can we scale this? So I'll just pause here.
Thank you so much. And it's interesting for me, being someone who's not from Africa and more familiar with Asia, but I see many parallels, including the great diversity of different markets, but also in some ways the underappreciated level of investable assets of the infrastructure available. And what's really heartening to see as well is some of the leadership in innovation and product design that we're seeing already in Africa. And we'll get into the sustainability angle in a little bit. So now over to you, Ricardo. You're from Brazil. How do you assess the evolution of the Brazilian capital markets over the past few years, particularly in terms of depth, dynamics, diversification, and the connections and openness to international investors? And what are some of the potential challenges that you see right now that are either Brazilian specific or related to what's happening in the world?
Okay, thank you, Mushtaq. It's an honor to be here, and thank you all for this panel. I would start saying that Brazil has undergone a meaningful and rapid modernization of its capital markets over the past 5 years, increasing capacity, diversification, and also efficiency. For example, in the last 5 years, reforms were implemented in the public offerings regime, investment funds and distribution rules, which reduced the time to market, issuance costs, while also improving standardization and comparability with offshore markets. This has been translated into a good increase in market size. For example, 10 years ago, corporate capital market issuances were about $25 billion. In 2015, 5 years ago, were about $75 billion. And last year, corporate capital market issuances were about $170 billion. About the Brazilian fund industry, the total AUM is around $2.2 trillion. 40% of these volumes is in fixed income funds, 15% pension funds, 15% in hedge funds, 10% private equity, 7% equities, 5% real estate funds. So the fund industry is relatively diversified. We are also observing individuals increasing direct exposure to corporate bonds. 5 years ago, individuals had a total direct exposure in corporate bonds about $10 billion, and currently is around $30 billion. I would also highlight that the deepening of and evolution of secondary trades are being observed in Brazil as well. Last year, corporate bonds traded around $200 billion in the full year, which is nearly 5 times the size that was 5 years before. So I'd like to highlight that ANBIMA is the Brazilian Financial and Capital Markets Association. It plays a central role in connecting market participants with the regulator, also improving market governance and infrastructure. For example, it provides daily market prices on fixed income securities. It also is the channel that connects participants to regulators, and it has also led initiatives to standardize documents, streamline processes, and broaden investor access to Brazilian market. One last data that I'd like to point out, 5 years ago, capital markets were source of 18% of corporate financing in Brazil, and last year were about 35%. 35% of corporate finance in Brazil is funded by capital markets. So the quantitative data is strong. About openness, I would say Brazil is open and liquid for our emerging economy, but we do have 2 key challenges. First, currency volatility. Brazilian real is a relatively volatile currency, and investors can hedge exposure in tenors up to 4 or 5 years, but longer-term solutions are still limited. And 2, the complexity of doing business in Brazil is something that is being addressed in capital markets, but also in the corporate space as well. I'd like to highlight that 3 years ago, Brazil approved corporate tax reform, creating the Brazilian VAT for corporates. This is being gradually implemented from this year up to 2033. So, in summary, Brazil has developed a lot capital markets. We have strong quantitative data supporting it, but the country should keep evolving in stability and standardization of its environment to keep unlocking more global capital.
Well, thank you. That is an amazing amount of information packed into a very, very short time. And what strikes me are a couple of things. First of all, the the tremendous growth actually in volumes and liquidity in AUM recently, and it just goes to show that especially in some markets that may not be, again, in the headlines all the time, you have to keep track, every 6 months, every year, or else you just lose track of how fast they're actually growing. I think another point that you've raised, alluded to, is the role of ANBIMA as well. And ANBIMA is a wonderful partner for ICMA, a cousin trade association, I suppose. But there's a lot of work behind the scenes in terms of developing the standards, the documentation, the regulations to enable that kind of growth. And one point I think worth highlighting as well is the increase in the proportion of financing that's done through the capital markets as opposed to traditional channels. And that's a theme that is very close to my heart in Asia, where we see many of the Asian jurisdictions still very heavily reliant on commercial bank lending. And that move towards capital markets, I think, is quite healthy. Of course, we promote it from ICMA's point of view. Okay, great. So, Domenico, now turning to you. We've spoken about Africa, we've spoken about Latin America. Your role now covers Asia, which is my home now. As we experience day to day, it's a vast region, billions of human beings, not only, but also really almost 20 real market jurisdictions, many of them very highly developed, many of them less developed, and sometimes, let's be honest, a bit of fragmentation in the market as well. Now, you're in a very interesting role at AIIB, and what I'd like to get into the details about a bit more is how do you actually choose your investments across a vast region? Of course, you have your normal credit analysis, but when you have to choose between all of the different jurisdictions, all of the different kinds of structures, walk us through your process for deciding on infrastructure investments.
Yeah, thank you very much, first of all, Mushtaq, and to ICMA. Always great coming back to Europe and mixing again with the different perspectives. So first of all, as you have rightly said, from your vantage observation point in Hong Kong, where is your base, this is a huge region and highly diversified. And we're not talking only about macroeconomic conditions or fiscal situations and what have you, but in terms of capital markets as well. So we deal with most Asian economies. And when we speak to all these interlocutors, you find so many differences and such a diversified scope across the different regional local capital markets. There are countries, it's good to name names just for example. You go to Malaysia, for example, highly developed capital markets, local capital markets. They have plenty of access to offshore funding in dollar terms or other currencies. If you look locally, the local banks, very well funded, despite the difference in rating as well, they compete with us in terms of economics. So sometimes we are not even able, despite the AAA rating of MDB, like Asian Infrastructure
and
Investment
sophistication
Bank.
as well.
Exactly, we are not even able to match them. So that's one extreme. Then there are other situations where you go to other countries, Laos, for example, you could go to Sri Lanka, Bangladesh. There's need for funding. So anything that we can get into, there is a conversation to be had. We often talk about this in the bank because this, of course, defines our approach, our policies. So what do we have to do? If you look at situation like the current situation, for example, with a lot of consequences from the Middle East, the situation going on in the Middle East, there is vast need for emergency financing, for example, and this is affecting pretty much everyone. So where do people look at? MDBs, plenty of capital, plenty of funding, so just provide some emergency financing, which we do. We just approved a $10 billion crisis facility for anybody who wants to apply. But we have often a debate about this because is this something, this type of emergency financing, which ends up typically into liquidity support, is it really what we were established to do? Probably not. And Modupe also comes from the same background. So back to your question, Mushtaq, how do we look in terms of screening, which type of situation to come in and intervene? It has to be aligned to the mandate of the bank, our policies and our priorities in terms of why the bank was set up. In the case of AIIB, for example, our priorities are to finance green infrastructure. So there's a lot of emphasis on climate finance. So anything there, we would be happy to start a conversation. What we call technology-enabled finance. So any projects with a highly innovative component definitely sits very well with us. Connectivity, what we call connectivity is basically, we can work with any of the members of AIIB, which are countries that are also outside of the Asian region, not only in Asia, but there has to be a connecting element in terms of linking those economies better, getting them to access and link better into the Asian region, so promoting mutual exchange. And then finally, a lot of emphasis on working together with the private sector. So try to mobilize private capital, use our own equity, strong equity position, good access to the governments and the local interlocutors to attract and be a catalyst for further financing from the private side. So that's how we look at it.
Okay, thank you so much, Domenico. I think you're maybe being a little bit too modest about your ability as a bank to provide significant funding and be a leader in the market. I do think you have an enormous amount of influence and really serve as somewhat of a vanguard in terms of policy and in terms of your ambitious financing across the region. Actually, I think it's a really interesting point about the current situation caused by the war in Iran and its effect on Asian jurisdictions. I've seen very much firsthand, again, talking about fragmentation, it has affected different countries in Asia so differently, depending on their fiscal position, on the infrastructure they have in place. And probably I'd love to be a fly on a wall in your internal discussions about that. But I think overall, I think AIIB certainly has a role to play in terms of financing the infrastructure necessary to be resilient in future crises, whether they be energy crises, climate crises, or geopolitical crises.
And just to come back there very quickly, this is a huge need, and there's a huge focus from the governments of all countries. The facility we just approved a couple of weeks back, $10 billion over a 2-year period. Now, to put that in perspective in the AIIB situation, that's what we fund, what we raise in terms of funding in 1 year. So typically our program is 10 billion per year. And so we approved, another envelope of the same amount, 10 billion over 2 years, which is for us, relatively for AIIB, is a lot of money.
But you're filling a gap where it might not be possible through the normal capital market system.
Correct.
So, okay. Well, on a slightly different note, but still on the infrastructure theme, Mr. Ma, Shanghai Clearinghouse is one of the key infrastructures for the Chinese bond market, and we heard a little bit about it in the last fireside chat, but you are deeply involved in the infrastructure on the onshore Chinese bond market, but also increasingly in the cross-border bond market and renminbi internationalization. So if you could, please walk us through, for those who may not be as familiar with Shanghai Clearinghouse, walk us through the main roles played by Shanghai Clearinghouse in the onshore Chinese bond market and the cross-border markets, and maybe in a broader sense, how is your infrastructure relevant for the rest of the world?
Okay, thanks Kapasi, thanks all. It is my honor to join this discussion. Shanghai Clearinghouse is the first qualified central counterpart recognized by Chinese regulators, and also one of the Chinese 3 central security depositories, playing an important role in both domestic and cross-border markets, provides convenience and support for global investors. In China's domestic market, Shanghai Clearinghouse has built an efficient and comprehensive clearing service system across major financial markets. In last year, our annual clearing volume reached 820 trillion RMB, including CCP clearing volume of 272 trillion RMB, growing rapidly this year. Meanwhile, in the bond market, we have established an issuance and a custody platform covering financial bonds, money market instruments, and corporate credit bonds, and especially maybe the panda bonds, with a total outstanding amount reaching 50 trillion RMB. In terms of the cross-border market, based on multi-tied custody model, Shanghai Clearing House has achieved interconnection with major global custodians, such as Hong Kong's CMU and Euroclear. For example, using the Bond Connect link with CMU as a cornerstone, we have upgraded the mechanism across market access, settlement, and risk management, such as launching omnibus trading facility, delivery various payment settlement, new bond info express, and supporting risk hedging instruments. This allows international investors to conveniently hold both onshore and offshore RMB bonds while continuing to use the familiar custody and settlement channels. Furthermore, we are committed to developing into the major registration and custody institutions for offshore RMB bonds assets, leveraging our role as a bridge and a hub of the market infrastructure to connect offshore RMB asset pools in the Asia and the European markets, and Africa and Brazil, and to enhance the liquidity and the security of related assets. And we will keep expanding the international listing network for offshore RMB bonds, strengthen cooperation and exchanges with major offshore listing platforms such as the Hong Kong Stock Exchange and Luxembourg and the Macau Stock Exchange, and accelerate the development of the global listing network. As for cross-border clearing and settlement, we will continue to act as a key bridge while bond connected and strive to become a global CCP for offshore RMB financial products. Going forward, under the guidance of our regulatory authorities, we will further broaden the range of RMB central compact clearing products, expand service in bonds, interest rates, foreign exchange, and other business categories, and provide more diversified set of offshore RMB asset risk hedging tools to enhance the efficiency of global asset allocation for the international investors. Thank you.
Thank you so much, Chairman Ma. And I can attest personally the enormous amount of work that you're doing with your team on this internationalization. And as you can see from your remarks, it's not just about kind of opening up. It's not just about opening up the regulations. There's a huge amount of work involved in connecting different infrastructures, onshore, offshore, creating the right operational procedures, for example, the right documentation, and also just the awareness, between different markets to enable this. And by the way, for those of you who don't know what panda bonds are, those are bonds that are issued by global companies into China, denominated in renminbi, in the Chinese market. Those are, of course, available to Chinese investors, but they may also be available to international investors who are investing in the Chinese market, ironically, perhaps, into international corporations. Okay, just for those of you who didn't know what that is, if you're afraid to ask. Okay, back to you, Modupe, and I promised to ask you about sustainable bonds. Very helpfully raised the example of the nature bond. So not just sustainable bonds, but also Islamic finance, of course, are two subsets of capital market products, but two that are very important to the global investor base and to ICMA as well. as well as the African market, I would imagine. So from your perspective, and you can speak from an African perspective, but also from a global perspective for lessons learned, what needs to happen for these instruments to scale more rapidly, more meaningfully across the continent and beyond? And also, if I may ask, maybe getting myself in a hole here, but the global standards that are in place, are they fit for purpose, or do they need to evolve in a different way for African?
No, thank you so much for that. And you're right, the sustainable bond market, the Islamic finance market are significant. In this case, every drop of liquidity matters. But if you look back at history, at data, in Africa, yes, we've seen a move, an increase in, just the volume and the value of issuances in sustainable type financing. But still, we're just about 0.3% of global issuances, which is tiny, right? But there are a few challenges with that, and I'll come to your comment around whether the current, policies, etc., are fit for purpose. Some of the things you have with issuers in Africa is you have to bear in mind that a lot of the issuers that could issue are yet to come to market. So you're talking about a lot of potential first-time issuers. A lot of these institutions don't have the data infrastructure, they don't have dedicated treasuries, and so coming to the market to issue a sustainable type or a labeled bond is quite expensive. You're talking about cost of second-party opinions, you're talking about the cost of even reporting thereafter, and then that brings us to the next question, which a lot of these issuers will ask is this greenium a fable? Does it really exist, right? What's the incentive to issue in this format versus the conventional format? And when you try to track actual sustainable issuances, it's been a bit difficult to put a label on how much greenium there really is or if it does exist. So that's another challenge. Then the third is just we're in a continent that is growing and developing. But that being said, we still have a limit to the amount of green bankable projects that exist, right? So that in and of itself is a challenge. So I've raised the challenges. How can we potentially fix this? And I'll point to perhaps technical assistance. I think that would go a long way. We're already seeing some of that from institutions like AFC, the likes of IFC, etc., who are making a deliberate effort to support with technical assistance just to get institutions, to encourage them to build the data infrastructure, to make it, to give them an incentive or at least facilitate their ability to meet these reporting standards. The other would be, just looking at the costs. The risk premium a lot of African entities pay is high. Right? So, for you to access this market, it ultimately needs to make sense from a cost perspective. So some of the things AFC is working with some parties to do is provide blended financing where possible, or to guarantee these instruments and, ultimately bring down the cost of funding. Similar applies to the Islamic finance space. The Islamic finance, what we're seeing is just the need to have the regulatory framework. Africa, and of course, Africa is 54 countries, so there are different legislations and different regulatory bodies. But one of the common themes is just the ability to, have a legal transfer. And, ownership is a key component of Islamic finance, right? So we need to work hand in hand to provide the regulatory framework that allows, or that, takes into consideration the context of the current regulatory framework, right, across these various bodies. So I would say in terms of just the direction of travel of regulation, I think, the ICMA, etc., we're all going in the general right direction. But I think what needs to be contextualized is just the nuance of Africa. We're not saying the bar should be lowered. We're just saying, the standards should be applied intelligently to each market, depending on the relevance and depending on, just the data infrastructure available. I think if we bear in mind that, yes, various economies are at various stages of industrialization, they're at various stages of development, and thus economic priorities as well differ. So whereas some countries may be able to dedicate more to data and data reporting, for some other economies, that money is better served, providing access to electricity or food or clean water and all of that. So I think if we bear in mind these specific nuances, it will go a long way towards moving the market forward and towards scaling access to sustainable funds. But I'll again come back to the ETI nature bond that was issued. I mean, it's the first of its kind globally. So, it goes to say that the continent is very passionate about tapping into sustainable type liquidity or sustainable type instruments, right? The support just needs to be there, and the value proposition needs to make sense from a cost perspective.
And in some ways, you're open to innovation, perhaps
Absolutely.
better than other more kind of, let's say, stuck in the mud, traditional jurisdictions
Yes.
who have their own ways of doing things that they don't want to change. And we see that in Asia as well. But one thing, actually, I would have to say that I think I see more commonalities than differences, among the different continents around the world. And some of the themes are ones that I hear all the time, in terms of corporates, issuers. They're just looking at the economics, right? It's all about cost. You're looking at the data reporting challenges, for example, and ultimately the cost of funding, the risk premium. These are the just very fundamental economic challenges. It's not about kind of what country you're in or what your land is necessarily. These are very, very, very common themes. Okay, well, just shifting gears a little bit, back to Chairman Ma. Now, talking about some of the balances of the different things you have to think about in China, of course, I would say we have definitely seen a broader policy shift towards opening up the Chinese capital markets to the rest of the world, which from ICMA's point of view is very much welcome. But that also creates risk, right? And how does Shanghai Clearinghouse see the balance between overall risk management and openness liberalization as China continues to attract foreign participation in your market?
Okay, it's a good question. In my view, through CCP clearing frameworks, risk management and market openness can complement each other. For China, Shanghai Clearinghouse provides steady, expert risk management to steer and secure the development of China's bond market. A successful example is Swap Connect, which is a creative cross-border CCP link mechanism where we have built a comprehensive risk control architecture, including cross-border resources pools, tied margins, clearing funds, daily market-to-market, and rigorous stress testing in line with the PFMI standards. This reduces the difficulty and the complexity for overseas investors to participate in China's bond market by providing a more convenient, efficient, and secure channel to manage RMB asset interest rate risks. Currently, 96 overseas investors are participating in Swap Connect, covering regions including Europe, the United States, Australia, Southeast Asia, South Korea, and Japan. On the other side, we are actively exploring the development of overseas clearing members' direct participation in CCP clearing, serve as a good complement to Swap Connect. In November last year, we developed the first overseas clearing member to conduct proprietary clearing business for interest rate swaps linked to fixed rates in China's interbank market. This provides overseas institutions with new options for risk management under the open market framework. Thank you.
Okay, thank you very much. And I think some of the developments that you've mentioned, go to show that you need not only the fixed income market, but also all of the different hedging products around that, all of the different connectivity between different infrastructures. And on CCP clearing as well, this is a topic that is very live globally for ICMA. We've talked about it in some of the previous panels. So it's good to know that you've seen some excellent progress there. Okay, back to you, Domenico. And we're going to take a little bit more of a global perspective for our last 6 minutes, I believe, of the panel. Now, of course, we invited you to this panel because of your senior role at AIIB and your knowledge of Asian markets. But you have experience around the world, and you've been at other institutions as well. And I think it's fair to say you have some authority when it comes to the overall development and resilience of emerging markets, if you want to use that term. I don't really like that term. It's a bit of a hobby horse of mine, but we'll use it for these purposes. So what are your general thoughts, speaking as a long-term practitioner, about how to strengthen bond market resilience in emerging markets around the world, and especially in today's kind of situation?
I think it's a great theme. And you say emerging markets, is it an expression that is still current to this day?
I'm not sure.
Exactly. I'm seeing more and more emerging from where we are. You know, I've been operating from Beijing, China for the past 7 years. And I have witnessed tremendous changes in some of these local markets. The first credit I should give to Mr. Ma and the people at Shanghai Clearing. In China, we have seen a massive, tremendous transformation happening in the capital markets. In the space of a few years, I joined AIIB in 2019. We have now become a premier issuer or provider of panda bonds into the market. We have worked with the regulators there to change some of to engage them, to change some of the mechanics that we said we want to bring a little bit more like international syndication perspective. They listen to us. Many technical features in terms of connectivity to offshore investors and so forth. As a result, now our bonds, which in the first place when we started issuing in China in 2020, were basically bought by a few large domestic players, very few. Now we got a following and an investor participation book with many both domestic and offshore participants. We also partnered with other MDBs. Modupe mentioned guarantee as an instrument before. For example, we promoted access on the panda bond market for other countries which wouldn't typically have access to that market due to their rating, like Egypt, for example, Pakistan also. But that's for China. For the other markets, I think to your question, I think clearly there has to be more work done to smooth out all the specific local peculiarities in these single jurisdictions. For a multi-country, multi-currency issuer of bonds and provider of finance like AIIB, sometimes it's mind-boggling, depending which market you're looking at, different regulations, liquidity conditions, repo markets, contracts, technical systems, need to establish, for example, local bank accounts,
FX,
which
custody,
needs physical presence, which we don't have. We are a supranational bond. So all of those things, there still needs a lot of work to be done. Technical assistance, as also Modupe mentioned, always welcome. There are some who are more equipped to provide. We, for example, AIIB, we are a younger MDB, so we are still developing that. But definitely that's something that can help. So I believe working on the local infrastructure to try as much as possible to harmonize and standardize conditions of access is going to do tremendous work to continue this development of local markets.
And it's not trying to force something into one model.
No.
But really just trying to find similarities as much as possible and evolve in a way that is harmonious, similar, and as smooth as can be for the international investors that are interested.
That's correct. And also, if you look at it from the angle of investors, not only issuers like us, investors, now there is more and more research and literature that talks about the value of decorrelated portfolios that diversify in terms of credit exposure, but also currency exposure. So in order to get that, you want to, as an investor, you want to have access also to alternative currencies, alternative jurisdictions and economy, and that needs more developed local capital markets.
Absolutely. Okay, Ricardo, we're going to give you the final word, and this will be the last question of the panel. So from your roles at a bank, but also at a national trade association, ANBIMA, so what do you see as the most important trends or reforms globally right now, sitting in Brazil but looking internationally, that will shape how bond markets attract and retain long-term capital?
Okay, so investors remain highly attentive to institutional predictability and regulatory certainty, and that's something that across the cycles, economies should remain disciplined to keep receiving global capital and increase and develop economy. The trends I believe are very important are a bit aligned with what Domenico just said. So first, broadening issuer access to capital markets. If you take a look at Brazil, it's a deep market, but still focused. The companies that most access capital markets in Brazil are large-sized companies. In that sense, ANBIMA developed, alongside the regulator, the FASO regime, which is basically a simplified framework for companies with revenues of up to $100 million to issue securities in the country. Second, the increased relevance of sustainable finance. Again, in that sense, ANBIMA developed the best practice guidelines for the issuance of social, green, and sustainability-linked bonds, fully alignment with ICMA principles. And the standardization of documentation and comparability with offshore markets is essential to attract global capital. And last but not least, the power of digitalization and tokenization. Blockchain technology has the ability to reduce settlement times, reduce costs, and increase transparency. Last year, ANBIMA launched its blockchain pilot project, which also increased interoperability across market infrastructures. So I believe that markets that combine all these factors will strive and receive more capital over the next decade.
Well, thank you so much, Ricardo. And it's happy for me to think that ICMA is focused on all of these themes and will continue to be with your support. Sorry, we're out of time. I wish we could continue this world tour, but please feel free to speak with the panelists outside or at the lunch and continue the conversations yourselves. Thank you very much to all of you for being here this morning, and thank you, amazing panelists, for the discussion this morning. Thank you.
Thank you.